Hi, my friends. Welcome back. And before you do anything else today, I really want you to hear this. Because if you've got money in a bank account right now, any bank, anywhere, this newer $2,000 reporting standard affects you in some way. And most seniors haven't had it clearly explained. You've spent decades working, saving, and being careful with every dollar. So the last thing you need in retirement is a quiet rule change creating confusion, especially when it touches how your deposits, withdrawals, and everyday transactions are monitored behind the scenes. The key thing to know is that while parts of this can feel intrusive, some of it can also work in your favor if you understand what's going on and how to respond. I'm going to walk you through it in plain language. No heavy jargon, no scare stories. So by the end, you'll have a clearer picture of what's changed and a few simple steps you can consider to help protect yourself and your family. Before we start, I need to say this clearly. This is general education, not personal financial or legal advice. And for decisions about your own situation, you should always talk to your bank or a qualified professional who can look at your specific accounts. Since the 1970s, U.S. banks have had to report certain types of activity to the government, mainly larger or unusual cash movements that might be linked to serious crime. So if you were just depositing Social Security, paying bills, or writing normal checks, you probably never noticed any impact. In more recent years, though, there's been a push for more detailed information from financial institutions, more automated monitoring, more reporting, more data on how money flows in and out of accounts. And one of the most talked about ideas in that direction involves looking more closely at accounts where the total activity runs around relatively modest levels, like $2,000 over a certain period. That can easily be your monthly pension or Social Security deposit, a transfer you send to help a grandchild, or money you move between your own accounts. And under newer monitoring standards, those routine movements may be tracked more closely by software systems, even if you've done absolutely nothing wrong. Picture your neighbor Dorothy, early 70s, lives alone, her benefit check comes in, she pays utilities, buys groceries, sometimes helps her daughter a bit, and that's it. Under older practices, her bank wasn't focused on those small, regular transactions. But under a more detailed reporting environment, the bank may now be expected to log and sometimes flag patterns in her account. And what bothers me is that no one has clearly told Dorothy that some of her everyday movements might fall under closer review. She has a right to understand that the rules around data and oversight are changing. This does not mean the government is trying to take your money, and it does not mean moving $2,000 automatically puts you in trouble. It means the financial system you live inside is becoming more data-driven, and the more you understand that, the less likely you are to be caught off guard. One of the best things you can do is simply pay a bit more attention. Many people set up direct deposits and automatic payments and rarely check statements because things usually run smoothly. But when monitoring tightens, awareness becomes one of your strongest protections, especially for seniors on fixed incomes who may only see a handful of transactions each month. There's also a side that doesn't get discussed enough. Better monitoring can actually help protect you from fraud. When banks are required to keep cleaner records and use stronger tools to watch for unusual patterns, it creates a clearer trail in your account and can make it easier to spot and stop unauthorized activity. Important because older adults are unfortunately frequent targets for scammers. For example, a retired electrician I'll call Frank later discovered someone had been skimming small amounts from his checking account, $20 here, $30 there, the kind of thing that's easy to miss. Because his bank systems were tuned to look for odd, repeated withdrawals, those charges triggered an alert. The bank contacted him, investigated, and he got the money back. Without that monitoring, he might not have noticed until the loss was much larger. That's why I call this a double-edged sword. More detailed reporting can feel like someone is watching, but that same structure can be what catches a criminal early. You might wonder, if I move a couple of $1,000s from time to time, helping a grandchild, shifting funds to a joint account, topping up savings, does that put a target on my back? And the answer is no. Normal, honest transfers like that are not what these systems are designed to punish. They look for things that are clearly out of pattern, not grandparents helping with rent. That said, it's still smart to keep quick notes about regular transfers in a small notebook or on your phone. just the date, the amount, and what it was for. So if your bank ever has a question, you're not scrambling to remember, you've got your own paper trail. I also want to acknowledge this can feel overwhelming. After a lifetime of being careful, it's tiring to hear about yet another change. But you're not alone, and the people who handle these shifts best are those who stay curious, ask simple questions, and take things one step at a time, which is exactly what you're doing right now. From here, a few habits can really help. Glance over your statements regularly so everything looks familiar. Keep notes on repeated transfers. Don't hesitate to ask your bank to explain how newer reporting rules might affect your accounts, and share what you've learned with people you trust who may not have heard about any of this. Finally, remember the silver lining. More monitoring also means more capacity to catch fraud at a time when seniors are often targeted. You deserve to feel safe, informed, and respected when it comes to your money. That's why I make these videos, to turn complicated changes into something you can actually use. If this helped even a little, I'd be grateful if you'd click like so more seniors see it. And if you'd like to keep learning, you can subscribe and tap the notification bell so you don't miss the next update. This is general information, not personal advice. So always check with your bank or a qualified professional about your own accounts. Thank you for spending this time with me. Take good care of yourself and keep taking those small, steady steps that help you stay in control of your money and your peace of mind.